I just got realized after years of struggling, the holy grail of trading is about changing the perceptions and beliefs about the trading. So it's the part 2 of CRT, Candle Range Theory course. If you didn't watch the part 1, please go and watch before watching the part 2 because everything is sequential in these lessons. So it's the quick disclaimer. We don't gonna use this kind of CRT model as I said at the first part because it's fake. In the first part, I have talked about very detailed explanation about the fundamentals of CRT, and I will add the cards to the video. So in this video, I'm gonna talk about the model 2 and the interconfirmation with the volatility. The model 2 is also the reversal model. We need to know about the 3 elements of this model. So the first of all, we need the manipulation candle. Let's say that the first candle is our manipulation. So the second candle is smaller reversal candle. It should be lower high or higher low in order taking it as a smaller reversal. It could be more candles than one, or it is for the long position. And the last one, we need the decisive candle. The decisive candle is our actually last manipulation candle, which decides for the reversal. Let's look at the quick explanation. It's for the situations for the more candles. And before diving in, please listen up carefully for understanding why it's correct CRT model. So our candle range high is this one candle after the manipulation. So let's dive into the more detailed explanation. After the manipulation, actual market before the market moves in opposite direction, in smaller time frame, more limit orders or stop orders are accumulating. So what the market algorithm does is they manipulating less time before going into the reversal. So we need to trap the market participants for continuing lower after the manipulation candle. So this one, it's our last manipulation candle, which took the candle high or candle highs after the manipulation candle. So it's the clean reversal model. This one right here. We're gonna take short position after that, or it's for the long position. We're gonna look at the manipulation candle, candle after the manipulation, and the last one is our decisive candle. So this is so different scenario. It's actually the model 1. It's not the same. They are not same because the candle range high and low are so different in its situation. So let's look at the interconfirmation. Actually, this interconfirmation gonna be the volatility breaks. We can use the volatility breaks in both turtle soup and the CRT models. So let's understand the volatility. Volatility means how much and how fast price move up and down in the market. So we know that without the manipulation, markets struggle to move. Also the CRT and the turtle soup is kind of manipulation, nothing else. That's why we know that if there is a knot in manipulation, the volatility will be lower. And with the manipulation, the market will be higher volatile. And it gives us as a confirmation it was the actual CRT which act as the manipulation and the increased volatility in the market. Also, it's same for the turtle soup. So for measuring the volatility, you can use the ATR, which stands for average true range. It's the free indicator in both platforms like the TradingView, TraderWeight. It doesn't matter, it's free indicator which you can add to the charts. And now let's understand volatility breaks or volatility jumps, which gonna use and combine with the turtle soup and the CRT models. So, sudden jumps. Look at here, inside of the circles. There are small sudden jumps at the volatility. The increasing of volatility doesn't mean the increasing of the price. The volatility can be increased still in the lower prices, while the market in the downtrend, volatility can be higher again. So, volatility is so a different concept than the price. As you can see inside of circles, there are sudden jumps, or let's look at another picture here. Inside of the white circles, there are sudden jumps in the lower volatility trend. What we need: candle range high, candle range low, or turtle soup plus volatility break at the same time before our entries. It gives the confirmation to us it was the actual manipulation which to bring volatility to the market. Here's the another examples. Just look at the here. This one, we learned about this candle range theory model. Today in this video, look at here, this little jump after the sweeping candle low after the manipulation. It's our decisive candle, or it's the model 1 CRT. Look at here, after the manipulation of these highs and closing lower, you can see in the market activity there is an increasing volatility, which gives a confirmation for our short position entries. And in the last one, you can see it's again the model 1 CRT, and after the manipulation, this one manipulation took out the orders, executed market orders, limit orders, or stop orders, doesn't matter. It closes to the higher prices, and at this moment we can see the increasing jump at the volatility, which act as the real manipulation move. So let's move on to the charts and understand more deeper. Look at this one here. As you can see, it's the model 2 CRT. This one is manipulation move, the smaller candles after the manipulation move, and the decisive candle. After the manipulation move of the decisive candle, there's a little bit sudden jumps at the volatility to higher prices. Of course, it's the market close actually. That's why we shouldn't be trade at these prices, because the market will gonna be close after the 4 p.m. So look at here. This the first. There are two CRT models right here. The first one, which took out these lows, is the model 1 CRT, and the second one is our model 2. It's the first manipulation move, and this one, this candle is the smaller candle which made the higher high, and the last one is our decisive candle which is executing these orders. And as you can see there, at this moment, at this activity here, the volatility increasing suddenly to the higher. Again, it's the model 2 CRT, the smaller higher high candles. So our decisive candle closing higher and the increasing volatility at this point. Here our manipulation candle, model 1 CRT model, and at this moment sudden jumps at the volatility. Also we can use it at the turtle soups. This one is the type 1 turtle soup. As you can see, the last manipulation move to the higher creates the volatility jumps. And also the turtle soup here. As you know from the turtle soup, it's the pure manipulation. It's not the ICT concepts. The creator of the turtle soup is the Linda Rushki, as I said. Here the more orders are accumulating, and the last one is the manipulation move, which we can see the confirmation from the ATR. The sudden jump at the volatility gives us the confidence for our entries here. Again, decisive candle right here, increasing in volatility. Look at these manipulations. This one is a turtle soup, which again, we see the increasing at the volatility, and this one is the model 1 CRT model. Again, the volatility increases at this moment. Here is another one. The manipulation candle is to cut the relative lows and executes all the orders. And after that, at this moment, we can see the increase in volatility. It's the model 2 CRT. Here, this one is the manipulation move. And this one is lower highs with smaller candles. And the last one is our decisive candle, which taking out these highs and closing lower. It's our pure reversal pattern. And at this moment, volatility increases suddenly. Finally, it's the end of the video. I hope you learned something new. See you later. Be safe.